MultiGreen, building attainable, sustainable, and tech-enabled multifamily real estate through impact investing.
Welcome to the MultiGreen podcast. This episode is part of a series captured live in Washington, D.C. at the Terwilliger Center Summit on Housing Supply Solutions, hosted by the Bipartisan Policy Center. I'm your host, Randy Norton, and today we'll be speaking with Seth Appleton, the president of the Mortgage Industry Standards Maintenance Organization, otherwise known as MISMO. We explore the current drivers of housing undersupply, note the progress of specific solutions, and highlight home ownership's unprecedented place as a driver of financial and societal strength. Enjoy our conversation. Seth Appleton, we are here today with the president of MISMO, the Mortgage Industry Standards Maintenance Organization, and you are the co-chair here at the BPC Housing Council. Explain what we're here doing today in Washington, D.C.
Well, first, thanks for having me on today. The Bipartisan Policy Center formed the Housing Council last year, and it's made up of former officials, practitioners, academics, and experts in the housing and community development space who all believe in this radical notion that housing is a bipartisan issue at its core, and that if we, as former Republican and Democratic officials, can agree on a set of solutions to confront today's housing market challenges, that the rest of the nation should be able to embrace those as well. So it's a pleasure to be here today, doing some of that work, rolling up our sleeves and making progress on today's topic, which is housing supply.
Well, thank you for being here today and sharing your time, talent, and expertise. Let's go back a little bit and tell us how you got here. You're from Missouri. You've been in D.C. for 20 years. What puts you in this unique position to have this perspective?
Well, it's interesting. I spent a good bit of my early career on Capitol Hill working for two members of Congress from my home state of Missouri. In one of those positions, I was the chief of staff for a guy named Blaine Luetkemeyer. He's still in Congress today. And he was the chairman of the Housing and Insurance Subcommittee. He's still very active on the Financial Services Committee, which has jurisdiction over housing issues. And it's at that time that I really dug in on these issues, because regardless of your district, regardless of the economy and the makeup of the area that a member of Congress represents, housing was an issue that was at the forefront but not talked about a lot. And I really learned a lot from him based on his expertise in the space and his ability to really bring people together in order to advance common sense solutions.
Tell us a little bit about MISMO.
Sure. MISMO is the Real Estate Finance Industry Standards Development Body. It's a subsidiary of the Mortgage Bankers Association, and we bring together lenders, servicers, issuers, GSEs, government agencies and regulators, technology solutions providers, and everybody involved in the manufacturing process of a mortgage. And our goal is to really reduce friction in the exchange and flow of information across all of those different market participants and make the mortgage life cycle more efficient. So think of other mature industries, Bluetooth, Wi-Fi, USB. Those are all industry standards that, regardless of hardware or software, allow devices and platforms to communicate. That's the mindset that we bring to mortgage finance.
I like it. How is it different than 2008 and pre-global financial crisis? What standards have you improved since then until now?
So there's been a ton of work in standardization. In fact, every loan manufacturer today leverages MISMO's work in some fashion or another, particularly if it's with Fannie Mae, Freddie Mac, or Ginnie Mae, which constitutes, the very large percentage of the market as it currently exists. But that's one of the kind of after effects of the global financial crisis, was this move towards standardization of data in the mortgage market, particularly in the GSE and government space. So that's been a huge change. I'd also say that credit underwriting and is much stronger than it was back then, and homeowners are much better positioned, even in a higher rate environment that we see ourselves in right now, and one where affordability is a real challenge. homeowners are better positioned to weather financial difficulty right now than they were back then.
Is the mortgage industry able to weather the current market conditions, and is the industry stronger today than they were in 2008? We were talking about some figures. Maybe you can share those.
Yeah, I think that the industry is a lot stronger today than it was before. It's a cyclical business. It's very much dependent on the interest rate environment, among other factors. I do think the one challenge is that we've seen is really this lack of supply, which we're here at this event discussing today. We've underbuilt in this country in the aftermath of the crisis by millions of units. And so that's really manifesting itself right now. We have borrowers with steady employment. We have borrowers with assets, but what we have is a lack of supply right now. And particularly in a rising rate environment, that also is putting pressure on affordability. So I think that the market overall is strong, but there's some different factors at play today than there were back in 2008 and 2009.
Would it be safe to say that today's market, at least the mortgage market, is efficient or more efficient, more conservative, stronger performing, whereas more of the inefficiencies are happening on the ground with the supply and production of homes?
I think that's right. I think the big challenge that we're facing right now that's different than other cycles in the housing market is this lack of supply. I think that the industry is doing a great job of trying to catch up and build, but land prices, labor costs, construction materials, those are all things right now that are continuing to escalate in cost. And so that is going to continue to make it difficult and challenging to build homes, particularly at the entry-level price point where much of the demand is right now. Because if you have high fixed costs going into a particular multifamily or single-family home, the natural reaction to that is to have to pass that cost on to the borrower or renter, to the buyer or renter rather, which means that it's going to be at a higher price point.
I want to share with you three figures, facts and figures that are recent, and I want you to comment on them. Yesterday, Harvard came out with their annual Joint Center for Housing Studies Housing Annual Report, and it appears that appreciation in homes year over year have increased over 20%. Another fact and figure, the National Housing Multifamily Housing Council has said 48% of all costs for constructing a multifamily building exists in the soft costs and the pre-development, the regulatory environment. And most recently, the article that was released by the Los Angeles Times saying that it costs $1 million in California to build one affordable apartment unit. Those are three glaring flags to me as a practitioner. What is your perspective on how to combat these three issues?
So one, I think that the Harvard Joint Center State of the Nation's housing report indicated that there's kind of record equity that American homeowners have accumulated, and I don't think that in and of itself is necessarily a bad thing. I think the challenge is allowing new entrants into the market, right, and making sure that they're not priced out of the market. That leads directly into the supply challenges that are really highlighted by both the NMHC report and the LA Times article that you mentioned. This fixed regulatory cost that goes into development is really driving up the cost of multifamily housing and has been doing so for a number of years. When I was an assistant secretary at HUD, this was an issue that we looked at. And what we found is, particularly in the affordable space, when there are multiple, layers of financing in the capital stack that may or may not be attached to different entities of government at all levels, it can actually make that affordable development more expensive because of the different reviews. And so I think that, some of the work that's going on right now to harmonize all of the federal programs, I think that will be impactful. I also think that as we heard at the conference earlier today from Congresswoman Van Dyne, who's also a former, mayor of Irving, Texas, focusing on things like expediting and reforming permitting processes. That seems like a best practice that's worked in a number of local communities. But ultimately, I will say, when we look at national facts and figures, and I kind of had to keep this in mind every day at the research office at HUD, housing markets are by nature localized. And so if national trends are very important and we need to be attuned to them, but if we're going to solve the supply problem, it means that we need to get more granular and really dig into the local level. What that means is in some places, the number is going to be higher than what NMHC articulated. In some places, it's going to be lower. Mm-hmm. We need to look at the places where it's lower, figure out how they've got that done, and then see if those lessons can be applied to those places where it's higher.
Generally speaking, I think the feds have done many great things from a macroeconomic perspective. I think policies, incentives are well positioned. The issues for us on the ground is very local, as you mentioned. It's the state, county, and city permitting process that is really the most expensive and time-consuming. And time is the most expensive variable. It's the thing you can't measure in any pro forma. So what can we do at the state, county, and city levels to really address this issue? This is like you said, a local issue.
Well, especially too at a time where there's inflation and some volatility in the interest rate environment, right? That time becomes even more precious and an even more important variable. But I think it really is going to depend on the circumstances on the ground. I'm from St. Louis, as you mentioned earlier. There are neighborhoods in St. Louis where there is housing stock that exists, but it needs to be brought up to a habitable state. It's vacant right now. That's not uncharacteristic of other similarly situated cities. There's other markets where there just is no housing that is affordable for many of the residents in those areas. And so I think, it's going to take a combination of rehab, preservation, new production, permitting, review, and improvement. All of these different things are going to move the needle. They may be incremental steps, but I think taken together, it will make a really significant difference. I don't think that we got to our current situation overnight, and I don't think that we're going to reverse it either. It's really going to take folks rolling up their sleeves and identifying these more targeted solutions on the ground and implementing them.
If there's one message you want to share with the listeners and our industry, what would that be?
I have always been struck by the Federal Reserve Survey of Consumer Finances, which comes out every couple of years. And there's one fact in there that kind of stands out time and again, which is the average wealth of the American homeowner household is 40 times that of the average renter, right? Home ownership, if done sustainably, is the single greatest vehicle towards wealth accumulation that our country has ever seen. So when we talk about providing access and opportunity to those who can't afford it right now, it's not only about shelter, and shelter is supremely important, and a lot of folks here today have been talking about that, and we shouldn't underestimate it, but there's other benefits that are conveyed along with home ownership, whether it's financial benefits, community benefits. And so we need to make sure that those opportunities exist for more of our fellow Americans, and tackling this housing supply challenge, as the BPC is doing today through this conference, is a big step in that direction.
Is this conference going to be each year?
I'm hoping that we continue to talk about and raise these issues as long as necessary. Again, we didn't get into the situation overnight, so I don't think we're going to fix it in a matter of months. But I hope if the next time we convene that we're going to be able to say we've made progress on this topic and things are moving in the right direction.
Well, just know from the ground, we're cheering you on, and we're listening, and we're watching, and we're trying to do everything we can to adjust and do our part. So thank you for being with us today.
Thank you.
Thank you for listening. Join us as we build 40,000 attainable, sustainable, and tech-enabled multifamily homes by 2030. And if you like the content you're hearing, hit the subscribe button. Follow us at Think MultiGreen and sign up to learn more at www.multi.green.